Hello and welcome to the Wealth Formula. I'm Mahalakshmi and I have with me a very special guest today who stubbornly steered clear of media. He's a reservoir of knowledge. He has very differentiated data on Indian macros, very granular data, which have plentiful investment insights. And with his own 3 decades of rich experience in investing with phenomenal track record, he can tell false narratives and counter them with hard facts and numbers. So absolutely delighted to have with us Maran Govindasamy, Executive Director and Co-founder of Unifi Capital. It's a privilege and absolute delight to have you with us in the studio, Maran sir. You understand, like I said, Indian macros like no one else. You understand, you have a knack for numbers. You have all those numbers at the back of your hand. Break down India's consumption basket to us, because if anything, over the last 1 month, most of the debate in the markets is also whether consumption will pick up, whether it will not pick up. And it's also something that is concerns the larger economy. Markets is, of course, one part of it. Break down the entire thing for us.
Will do. Thank you for first of all, the opportunity. Sincerely appreciate. Your question about Indian consumption market presupposes the Indian consumer as one entity, which it is not. We all know we are a country of several languages, religions, value systems. But when it comes to consumption, we should bear in mind the South is much different market. As a country, we may have 140 plus crore population consumers. But South, that include Tamil Nadu, Kerala, Karnataka, Andhra, maybe 18% of the population, but almost close to half of the Indian economy, maybe 45%. Then you have the Gangetic Plains, which include UP, Bihar, and West Bengal, where you may find almost half the population, but it may not even be 1/4 the economy. Then you have middle of India, that include West, Central, that may be 1/3 the population and close to 1/3 the economy. So you have a very vastly different regional equation when it comes to the consumer numbers and the consumption size.
Right.
Also, when you put this 140 plus crore population consumer market in terms of the income group, because that's the easiest way to relate consumption. Each of these numbers, sometimes we may make the mistake of confusing per capita numbers with household numbers.
Right.
Consumption should be seen at the household numbers level. India has an average of 4.5 people households. Sometimes averages could also be misleading because in South, especially if you take, say, Tamil Nadu, which by the way in India has the lowest or the smallest household size, close to less than 3.5. As against some of the Gangetic Plain states, where the average could be more than 6.5. So the average is 4.5. We are about 31 crore households in India.
That's right.
This 31 crore households, if you put in a scale of 1 to 100, where one is a farmer in Bihar with less than $2 daily income, that's 170 rupees. And in this scale of 1 to 100, 100 is the richest household. Then what you will notice is probably the 80 to 100, the richest 20% of India, that's about 6 crore households, will be the major consumers of many products that we are looking at.
Right.
They may be 20% of India, but that's where you will find probably half the income and 80% of the savings. In this scale of 1 to 100, the 1 to 60, the bottom 60% of Indian households, that's about close to 18 crore households. They may be 60% of the denominator, the total consumer base, but they may not be, they will be very minuscule when it comes to savings. There will be large part of certain types of consumer, like food, like several FMCG products. And the 60 to 80, so middle class of India is not in middle of India, it is in this 60 to 80. That's where you will find income levels rising and consumption rising, but of certain types of products. So when we look at the consumption market, for example, within consumption market, you may look at, say, hotel industry. The hotel industry may consider only the 80 to 100 as the total addressable market.
Right.
But if you look at soaps, detergents, toothpaste, washing powders kind of consumption line items, how much ever the richest 20's income level rises, their consumption of these products are not going to rise proportionately.
That's
the
right.
volume growth has to come from the next 20 or the bottom 60.
That's right.
Where you might have seen different levels of income patterns in the recent years. And therefore, for us to make sense of the consumption market, we need to be conscious of these divergences that exist both at regional level, like South and Central and Gangetic Plains, as well as at the household income levels being too divergent, bottom 60, the richest 20 and the middle 20. And depending on which product lines, which sectors you are looking at, we can make sense of the recent 3-4 years of slowdown in certain businesses. For example, you might have seen people talking about consumption slowdown in the last 3-4 years, and they easily take pointers like soap sales have grown only 2% per annum.
Right.
Footwear industry would have grown +2, -2 range. Toothpaste industry would have grown 1-2% per annum only, as against 7-8% growth in economy and 10-12% nominal growth in several line items. But you might have seen businesses like hotels, hospitals, growing almost 100% over the last 5 years.
That's
Even
right.
white goods,
That's
air
right.
conditioners, washing machines. Why do you see 100% growth in certain line items over the last 5 years and hardly 2-3% growth per annum in the same period in certain other line items? Can be explained by the top 20% line items have grown significantly a lot in the last few years, but the bottom 60's consumption hasn't kept pace.
Right.
And therefore, we need to be at least conscious of these divergences for us to make sense of many of these consumption numbers.
Right. So, which of these trends that have defined the last 2-3 years, for example, the soaps and detergents category, essentially, which is mass market where penetration is high because they are daily use items, those have ostensibly suffered because of inflation hit a certain section of the population. Post COVID recovery for them was also
Right.
weaker, while the top category that you're talking about saved more. They could therefore save more, they could spend more. All of that happened. Which of these drivers and trends do you think will be perpetuated in the next 1 or 2 years, and which do you think are poised for a reversal? Especially after this GST, there is so much optimism because the cuts are across the board. The cuts are for autos, real estate, and so many other daily use items too. Is that a trigger? Are there any other larger economic factors that will drive any possible recovery?
To understand this, we can understand this much better if we understand how we ended up in this situation. See, the slowdown in consumption It's not just post-COVID. If you look at even pre-COVID, 2018, 19, 20, post-demand GST implementation in the first place in 2017, they had the unorganized sector finding it hard to engage in business with the organized sector in 2018-19.
Right.
And a large part of the bottom 60%, their employment and livelihood were coming from the unorganized sector. And they took the brunt of that slowdown in 18-19. And then COVID happened. Both in the first wave and second wave, the bottom 60s income levels took a bigger hit than the 60 to 80 or the top 20. And the reversion to normalcy took much longer, as we rightly pointed out. But what we should also bear in mind is post 22-23 reversion to normalcy, even though our headline inflation numbers were a bit nominal, the food inflation was a lot.
Right.
Why it matters a lot for the bottom 60 is, if you look at our economy, which is close to $4.2 trillion, where almost 60% of is domestic private consumption. That's about close to $2.5 trillion. This $2.5 trillion, if you take the total pie, almost 31% is food. About 17% is travel and tourism. About 6% is healthcare. Close to 5.5% is clothing. And another 5.5% is education. Every other line item is below 5%. But this 31% food may not be 31% your household and my household. That's the average of Indian domestic private consumption.
Right.
If you take the bottom 60% of Indian households,
Significantly
the food,
higher.
Absolutely. So when you had high food inflation and not proportionate income growth in the bottom 60, the money they had for everything else was much less. And that you could have seen the impact in several other products where you were betting on that bottom 60 for volume growth. The richest 20, their income levels did not take a hit in 2021-22. For a brief while, we even had used the term revenge spending that came in 21-22.
Right.
They could have done that because they had access to liquidity.
Right.
And they had anyway current income. The type of demand that richest 20 had, you could have seen that being felt in number of washing machines sold, air conditioners sold, private vehicles sold, private healthcare spending, travel, tourism, all those. And some of that has resulted in such a manner. For example, today people may find it very hard to accept the fact that the travel and tourism today in India is much larger industry than even Indian IT industry. Right?
Wow.
Not only the recent growth has been so spectacular, and what drove that growth may also be a combination of medical tourism and several other factors in recent years, which probably explains why counterintuitively, when many people think Rajasthan and Goa are biggest tourism markets in India, actually the largest tourism industry is Tamil Nadu tourism in India.
Wow.
Thanks again to medical tourism and so many factors. This travel and tourism industry actually is not an industry which is depending on the bottom 60. Is most of its target customers are in the richest 20, and they have grown. So the consumption growth in many line items that we had seen the slowdown in the last 3-4 years, where the line items where the volume growth had to come from the bottom 60. There you will find, at least in the recent months, a significant slowdown in food inflation, as well as some savings on the cost in terms of GST and other benefits. And no weakness in household income level, and potentially a good monsoon should help the liquidity with the bottom 60 to spare for anything non-essential goods.
Sure.
And there you will find volume pickup. But the biggest pickup will happen in the middle segment. See, in the top 20, which is about 6 crore households, that's very important piece in many economically sensitive businesses. You may often find people saying, as recently when advanced tax filing period happened, there were close to 7 crore, 7.5 crore IT returns filed, leading people to quickly conclude that 5% of Indians file IT return. Right? It looks like a very small number. But the mistake we commit is we take these numbers on individual basis. How 5%? There are 7 crore plus IT returns in the nominator, and there is 143 crore people in the denominator. In reality, if you look at that 7 crore IT returns filed, hardly 60-70 lakh IT returns had common addresses, which means same households, husband and wife, father and daughter, father and son. That means we have between 6 to 6.5 crore households where only 1% file IT return out of totally 31 crore households in India.
Right.
So that's about 20% of Indian households.
Right.
So we should not say 5% of Indian file IT return.
Right.
We should say 20% of Indian households have 1% filing IT return.
Right.
That number in isolation may require such a lengthy explanation, but if you see this in conjunction with various other similar economically sensitive numbers, for example, if you ask people how many Indians have a credit card, that's again 5.5, 6 crore, distinctly different credit card holders. Okay, how many Indians carry a passport? Again, 6-7%, right? Why number of Indians holding a passport is 6-7%, number of Indians filing IT return is 5-6%, number of people who have a credit card is only 5-6%. It's not 5-6%, it's 20% of Indian households.
Right.
That richest 20% of Indian households, income growth on an annual basis doesn't result in proportionate consumption growth.
True.
So for several years in the past, last 20-25 years, the savings rate in India had been about 30-34% per annum.
That's right.
And because a large portion of the household income over this period happened in the richest 20, and therefore you had a consistent, steady pattern of savings rate, and therefore steady pattern of consumption growth. But you might have observed that in the last few years, household savings rate falling from 34 to 31 to below 30, even touching 25, leading people to conclude that Indian households are saving less and consuming more, and more. Some of them take this as a sign of stress at Indian households, which actually it is not. It is not that the richest 20 which you had been saving in the past have been or recently have stopped saving or started spending more. In reality, the incremental growth in household income has started accruing in the next 20 also, where you don't find as
the
high
savings rate is not
rate.
as high.
Yeah.
Right.
So the consumption growth in the next 20 will be far higher. It is very commonsensical, right?
Right.
If you're a household of 1 crore per annum income, and if I am a household of 5 lakhs per annum income, and if there is a 20% growth in both our household, your 20% growth in income will be mostly savings and wealth. And my 20% increase in household at 5 lakhs per annum will be mostly consumption and some savings.
Right.
As against a household where the income is 2 lakhs, 3 lakhs per annum, most of their income growth will be consumption. So the consumption share of income differs based on which income category these households live. And therefore, in the recent years, you might have seen the consumption growth happening significantly faster or more because the income growth in that category is growing. Also, we should bear in mind the demography element in this. See, again, we should not overgeneralize whole of India into one. You may find people saying India is a young country, 28 years median, 2/3 of India is aged below 34. But this could include a state like Tamil Nadu. By the way, Chennai will become the first city in India to cross median age of 40, right? When the median age of India will still remain 30 or below. That means there should be certain regions like Bihar and UPs where the median age is close to 20, 21. So by 2036, it's a competition between either Chennai or Coimbatore. One of them will cross, or both of them could cross median age of 40. So when you have a country of two-thirds of Indians aged below 34, and the consumption share of income, depending on the age of the breadwinner, the household income earner, and how many people in the household earn, all that will play a role in that consumption share and the nature of consumption.
Right.
And therefore, we should not attempt to make sense of consumption in one go based on one number.
Fair enough. So again, coming back to the same question, now you've clearly told us there are 3 layers in this consumption basket. In the bottom layer, because of GST cut, inflation easing and all that, you do see some recovery. How do you see the middle and the top layer in terms of consumption? I'm asking this because one of the big trends in the stock markets, also when you look at demand offtake across categories, is this huge premiumization theme where everything premium sort of sells better, whether it is cars or real estate or whatever it is, right? Where do you is that a trend that will continue, or is that on a cyclical high which can go through another 2-3 years of stress? You also said, revenge spending is a term that we used. Is that going to plateau? What are your thoughts around it?
Actually, India is a very unique market, and some of these trends that we have seen in other countries, if we extrapolate to happen in India, we may get disappointed. Mm-hmm. Even though for simplicity's sake, we are putting India in 3 consumer categories, there are several categories within categories. The richest 20 may have the top 5 as one category, next 5 as one category, next 10 as one category. But the richest 20, their consumption growth is not going to be proportionate to their income growth.
That's right.
And their consumption may not have to be in India. Part of that consumption growth is being felt in some other markets, like Dubai, Singapore, US, Europe.
Sure.
And maybe the wealth market, you may get a lot of indication from the income level growth of the richest 20. The premiumization is happening in that richest 20. See, richest 20 is a vast number. We are talking about 6 crore households of 4.5 people each. As actually, household size in the richest 20 is very small. People find it very hard to accept, but in reality, the top 10% of Indian households, the average size is 3.5.
Right.
The bottom 10% of India, the household size is 6.5. So the richest 10 and the richest 20, if you look closely, their income levels are higher. The number of people in the household is smaller. The amount they spend as percentage of their income, for example, food we discussed. Food as percentage of total household income in India, average could be 31. But for the richest 10, it may not even be 3 or 4. And beyond certain extent, it keeps falling as the income levels rise as a percentage of the income, because food as percentage of income keeps declining because it's more or less constant number. The premiumization is a function where this 80 to 90 comes above 90, right? In the type of hotels they stay, the type of restaurants they eat.
Right.
So the crowd you see in airport, the crowd you see in restaurants, the crowd you see in hotels, that doesn't mean Indians are flying more or Indians are eating more. It's actually more Indians flying and more Indians eating out. Where is this more coming from? That's not coming from the same 10. It's coming from the next 10.
Right.
So the premiumization is a very long-term phenomenon. And it is.
So you're saying the consumer category itself is expanding.
Expanding.
Layer
That's
by
the
layer.
right word.
Right.
It's truly expanding. And what is aiding that expansion is the premium market was a very skewed market near the top one,
Right.
top three, top five.
Right.
But it is now growing a lot because the next 10 is coming into that. And you will see this not just a 1 year, 2 year phenomena. It's more 10, 15, 20 year phenomena. And that doesn't mean premiumization is the one singular concept. You will also have the mass coming into consumption side.
Right.
So I think India's consumption growth will be on parallelly both lines, both
Okay.
premiumization as well as volume growth.
Right. Now, if you were to sort of, along different, of course, before that, let me ask you this question. Can you bust some myths around total addressable market? One, of course, you've said that, people are just looking at that one single number and they distort the denominator by not looking at households, but looking at individuals. Anything else that you can sort of myth bust for us in terms of, for example, one startling thing you said is how Indian tourism market in size is as big as the IT services market?
Yeah.
So in terms of revenue.
Yeah.
Anything else like that?
The total addressable market, you would have seen several offer documents where companies say the per capita consumption of this line item globally is so much and India this much, and therefore it can grow. Why even our own friends in mutual fund industry you may find saying that only 3.5% of Indians invest in mutual funds. And as soon as we hear these data points, our mind thinks there's so much to grow. It's a fact that only 3.5% of Indians invest in mutual funds. Distinctly different mutual fund folio holders is about 5-6 crore, which as a percentage of 143 may be less than 4%. But we should not look that way. We should look more at a household level.
Correct.
And today, if you check how many Indian households have, let's say, a car, it's about 7%. How many Indian households have any kind of private vehicle, including two-wheeler, bike? Maybe about 40-45%. Which means does that mean the total addressable market for a bike company is double of what it is today? No, because it's the market which is capable of investing. But last year, one of the IIM did a study on household ownership pattern just to see on several goods like air conditioners, washing machines. We got curious in tracking that washing machine data because you may have 5 ACs at your home. I may have 2, but all of us tend to have one
washing machine, right?
So 99% of the households which have a washing machine will have only one, and that's one kind of product that we buy in India. You may buy jewelry in Dubai, you may buy iPhone in Singapore, but washing machine we tend to buy. So the washing machine sales in India is a good indicator of how many households come into this consumption bracket. And that number, by the way, last year was close to 68 lakh washing machines, which is very large. And only we changed that once in 6-7 years only, which means if you have numbers of what is the number of washing machines sold 6-7 years back, which is getting replaced now, then you will get the number of how many households are coming to the new consumption market for this. And that total addressable market for washing machines, if you today ask how many households actually have a washing machine, that is only 18%. Number of households with air conditioner is even less than that. Number of households with refrigerators may be 40%. So the total addressable market for each of these products is a function of the income level, number of people in the households, and their consumption pattern, their savings pattern, all are linked in a way. Coming to mutual funds, if you know that 80 to 83% of the wealth in India is with the richest 20% of Indian households, and if you know that this 3.5-4% of Indians holding mutual funds actually belong to 13, 14, 15% of households. You know, out of 20% of Indian households which has 84% of the wealth, 13% of those households actually invest in mutual funds. gives you far relatable data point and insight than merely saying that 3.5% of Indians invest
Yeah.
in mutual
Yeah.
funds. So, the sizing up the market to understand total addressable market requires some attention to details, some data points, and that could vary product to product, sometimes region to region, and therefore a global comparison could be quite misleading.
Okay. Now let us break down even further. So if you were to just, organize the categories or product categories for us in terms of capacity to grow double digit over the next 5 years, let's not take longer than it might be very difficult. Over the next 5 years, categories that you think can grow double digit based on the addressable market, as well as like you say, the reinvestment cycle or the replacement cycle. In various categories it could be very different. In fridge, I don't even know if it's 6 years, maybe it's 10 years,
Yeah,
maybe 12
correct,
years for
correct.
Indians, right? So based on that, which categories do you think have a runway of potentially 10 to 15% kind of growth for the next 5 years?
It's hard to answer in a way, but easy to answer also in another way. It's hard to answer if you just look around the list of sectors and pick the ones which will have double-digit volume growth. But it's easy to answer if we just invert the same question of who's the demand driver of this product. For example, if you are talking about a private vehicle, a car, the demand driver is not the bottom 60, maybe not the next 20. When we say 7% of Indian households own a car, maybe 70% of that 7% is richest 20. But 30% of that 7 is actually the next 20.
Right.
So our demand growth is not necessarily occurring top down. Probably 20% of the richest 20 may not have an air conditioner. But a small percentage of the next 20 has an air conditioner.
Right.
Which is an indicator that the demand growth is not happening top down. Having said that, it is important to, if we understand the demand drivers, then we can size up different sectors. The easiest way to look at is the richest 5%, which is close to about 1.5 crore households, which itself is a very decent number. Their demand growth on premiumization is real, and that will continue. The next 15, which is part of the richest 20, that's where you see volume growth in the premium products, which is where you find civil aviation growth, private healthcare growth.
Right.
So hospital stocks are running up, private healthcare billings are running up. Doesn't mean Indians are becoming more sick.
Right.
It's the number
More
of
people
households.
are able to afford.
Exactly. That way, if you can relate to, you will find if a country like us who have close to 68 lakh graduates coming out of colleges and maybe 14-15 lakh postgraduates, 45-46 lakh undergraduates, and a large portion of that is happening in the 60 to 80. And these are all households which are much smaller, more urbanized, more nuclear, and their demand growth. Therefore, the category of products where you will find the 60 to 80, the middle class of India coming into consumption market, that may include hotels,
Right.
hospitals, consumer durables, home electricals, kitchen equipments, beverages, retail credit. See, credit is probably one of the few shaking event that's happening in India which we don't even notice. When people say the household credit is rising, again they look at that as a sign of stress. It's not that Indians are borrowing more. It's actually more Indians are borrowing. And more Indians are borrowing not as a sign of stress, but more Indian households have become confident of their income. And when you have more people working in a household, that confidence comes naturally. And this is still a much smaller number as compared to the global averages.
Right.
We are actually leapfrogging in credit by moving from no credit card to some EMI card, some product related card. We are moving from no credit straight to a product related credit or EMI card kind of credit. That growth is happening in the next 20, and that again is a much longer term trend. So if we extend instead of just 5 years, maybe about one of the biggest challenge in India is time stamping an event. If you timestamp an event too short, like this quarter, next quarter, your guess is as good as my guess. It doesn't happen the way we actually expect. But if you don't timestamp into, say, 3 years or 5 years, but a little around that range, say a 7-8 year period, you will find the next 20, several households. On an average, we think there are 4 million, 5 million households moving from that 60 to 80 non-consumers of several products to consumers of these products. And equal of that number is moving from some consumers of some of these products to consumers of premium products. And therefore, you will find these segments which I talked about. You might have noticed beverages as one of that. People don't realize Indians spent more on alcohol last year than on jewelry.
Wow, really?
Indian alcohol industry last year became larger than Indian jewelry industry. At least that people can take reluctantly, they will accept because there is hard data. But what people refuse to believe is this 18% of Indians in South, Tamil Nadu, Kerala, Karnataka, Andhra, that's 26 crore, which is 18% of the total population, consumed more alcohol than whole of rest of India.
Okay.
Including West plus North plus East plus Central in value terms. Almost 45-50% of Indian alcohol industry is South, which is only 18% of the population. And their consumption is rising, not because they're drinking more, but the premiumization, volume growth coupled with the price growth, the category growth. And
more people drinking.
But that more people drinking is not to be seen in isolation. If you see that in isolation, you may make wrong inferences. But if you see that in conjunction with the employment participation rates, the income level growth, the middle class growth, then you can make inferences which help you to predict that this is not a 1 year, 2 year trend. This is a beginning of a multi-long year trend.
So in cars and stuff like that, you will also have to account for the fact that in many of these things, of course, not in household items like washing machine, fridge, etc. Also for, better participation from the other gender, like, for more women coming into workforce also will mean in a sense, the total addressable market for some of these categories will be much higher.
Will be. Probably that is the single most earth-shaking event happening in India. Women participation workforce, right? We have come a very long way. When we got independence in 1947, our literacy rate used to be 14%. Just number of people who can read and write. Right? That literacy rate for women used to be 8% in 1947. As recent as 1991, when we opened up liberalization, even then our literacy rates were hardly 60-70%. But the southern states, which invested in education significantly, where you had few districts in Kerala and Tamil Nadu even reaching 100% literacy rates as early as 1990s. And the benefit of that investment into education, women education, helped in women participation workforce rising 25 years later. Post Riga abolition or restructuring, you might have observed some decline in women participation rate because till 2014, people who work 2 days in a week, which is 100 days in a year, were considered employed. And there were some inconsistency in data of rural labor, women labor participation rate. And therefore, post 2014 till 17-18, you had seen that declining. But the softer sectors, the organized sectors, especially, for example, IT and financial services, the women participation rate, which used to be, if you take more, say, top 5 Indian IT companies, not just top 5, if you take the entire Indian IT industry, about 10 years back, 15-16% of the total employees were women.
Right.
Last year, it crossed 37.
Right.
In few companies like Infosys, with TCS, it is touching 40%.
Right.
Right. If you had 100,000 employees and 15,000 women, now you have 200,000 employees and 80,000 women.
Correct.
And that is very evident even in financial services industry. There are several private banks where women as percentage of the total employment, which used to be 15-16, is now 31-32s. You can see that in, for example, if you take pilot industry, India has more women pilots as percentage of total pilots than even US.
Really?
Yeah. Right. So there are faster progress we are making in some of these sectors, but it's yet to catch up in a meaningful manner in the manufacturing and the tier 2, tier 3. It is happening in IT and financial services, but not yet to catch up in several sectors. But the input for that, which is right labor, talented labor, trained labor, that's happening now. There will be a 10 years to 15 years gap between the time that you invest in this and they're coming into higher education market, and then another 10-15 years for us to see them in employment market. So that way you will find the education investment made in South in 1970s, 80s playing out in 15 to 20. But actually it will play out opposite in South. For example, from 2036 onwards, you will find the median age rising faster because the life expectancy rate is rising in overall in India, but more so in South. But child per women is falling.
Right.
Today, the average child per women in Tamil Nadu is lower than average of Europe, right, over the last 15 years. So when you have less children, that now child per women is 1.3, 1.4 in Tamil Nadu as against 2.1, which is the replacement rate, and the whole of India is below the replacement rate.
Right.
So when you have life expectancy rate rising and no new children are born, then you will find median rate rising. But post 2040, in South you may find more dependence than working age population. Whereas rest of India will have significant percentage of their population at working age as percentage of total population. So it may work against, so South probably is passing through what we call as the peak phase.
Right.
The peak phase may continue 5-10 years.
Right.
But thereafter you will find much different pattern of consumption than what we are seeing now. But investing in southern consumption markets today based on its last 10-20 year growth, assuming that it will get...
it won't get replicated. Yeah. True. Interesting. So Viksit Bharat will happen in South India before it happens in North India for sure. Okay. Around these jobs and income, one of the concerns is, what are your thoughts on jobs per se? Because there are multiple reasons that are emerging which look to be structural. Maybe it will not happen this year, but the threat of AI, the threat of tariffs, which we know is a small part in terms of the GDP and revenue composition itself, but in terms of employment and labor intensity, it's a far more labor intensive sector, the exports related sectors. So what do you think, where does this fit into our overall assumption that the mid layer will continue to grow and the consumption in those the key consumption driver will be that category? Is there a threat to that, or is it unquantifiable?
Actually, many of these concerns people have are disproportionate to the reality. The concerns on employment is not recent concern. Tariff is a recent concern. AI is a recent concern. But you and me have been hearing about the concerns on employment for several years now.
Right.
When people get a data that unemployment rate is rising, in their mind they think that more people lost jobs. Actually, it is not. Unemployment rate is not equal to 1 minus employment rate. The definition of unemployment rate, for example, US says their unemployment rate is 3%. It's 30-year low. That's a sign of strength in the economy. And if you ask people, does that mean 97% of Americans are employed? Some of them blink and say yes. Actually, it's not. Their employment rate is 71%. Unemployment rate is 3%. What about the balance 26? They're neither employed nor looking for employment. So unemployment rate is number of people who are not employed and looking for employment.
Correct, only voluntary.
So the unemployment rate should be seen along with labor participation rate and the working age population as percentage of total population. And some people may not even know that the US calculates the denominator, the employment pool, from age 20 up to 65. Whereas in India, we count from age 15
Is it okay?
to 60.
Okay.
And there's a large number in this. Second,
Right.
as you find more people pursuing higher education, you will find the labor pool taking some time to grow because of the investment in education. But having said that, the unemployment rate rising, if it is happening along with the employment rate rising, is a great indicator. Right? For
So
example,
you're saying unemployment,
rate rising along with the employment rate rising.
right?
For example, more Indians are employed today than the number of Indians who were employed 5 years back or 10 years back or 7 years back. 5 years back may be COVID related. Some
Fair
people
enough.
may concern
Right.
that. More people are employed today than 2018, than 2016, than 2022. And more people are looking for employment today than the number of people who are looking for employment 2 years, 4 years, 6 years back. Is that a good or bad sign? It's a good sign. For example, last year there were 68 lakh graduates who came out of colleges. 45 lakhs of them were undergraduates. 14, 15 lakh postgraduates. Half of them are women. Little more, half of them. And all these women graduates decide not to go for employment. What will be the impact on unemployment rate? It will be less. Right? Is it a good sign? It's not.
Right.
So, unemployment rate going up as employment rate falling because you have the same standard employment pool is a bad sign.
Right.
But unemployment rate rising along with the employment rate rising,
Right.
along with the India's unique nature of more working age population as percentage of total population,
Right.
and more of that working age population which are both genders looking for employment is actually a good sign. Economy will take some time to readjust to that incremental number. You can't create exact number of jobs for the
Right.
exact number of people, and therefore if it is only 10% of the youth unemployment is getting unemployed, then it's not a terrible sign. That means 80-90% of the youth that came out of colleges got employed. Should be other way. This is on the employment number.
Right.
With your specific question about the recent developments, which are AI, the impact of AI and employment, I'm not at all concerned. That concern is there in few subsectors in economy. The impact of tariff on employment is real, but that's only too short term. And I don't think this is going to be a 3-year, 5-year
Understood.
question.
Right.
For example, how many people in entire Indian IT industry, as employment number if you take, is maybe 70-80 lakhs. How many people in Indian textile industry? Maybe 4.5 crores. Textile may be $130 billion line item in our GDP,
Right.
but it has 4 crore employment.
Correct.
IT may be $220 billion line item in our economy, but it is just 70-80 lakhs, right? The tariff-related employment hit, I think, is 1 quarter, 2 quarter, 3 quarter. I'm not just saying that tariff will become zero or go away, but we will find a different
more
solution.
palatable.
Yeah. But the employment hit on AI is too premature to make any long-term inferences. I don't know whether you remember, I began my career in 91, 92. In 92, for about 2.5 weeks, all the banks in India were closed continuously. Those days only public sector banks. India opened private sector banks post 94. I'm talking about 92, 93. Because RBI asked the banks to computerize. And labor union in banks were very powerful. And they felt if you computerize the branches, what will happen to all the people who are doing ledgers, recon, cash counters, all this. So they genuinely believed if you computerize branches, the employment will decline, right? And that actually 2 weeks, the whole country being held ransom by certain unions, by keeping the entire banking industry closed, actually prompted RBI to go for privatization, which worked in beautifully well for us. But in reality, 10 years from then, after computerization, did the number of people in the industry grew or declined? Grew. Because when you have efficiency coming in, which in turn is leading to certain new business opportunities opening, the type of employment may change. When the banking industry more than tripled post 94 over the next 10-15 years, it is not that we had 3 times more recon people, 3 times more ledger people. We had more people of different skill sets. So I don't think I'm not an expert in technology front, but my observation as a reader of history says employment-related concerns on AI is too premature.
Overblown.
Maybe the nature of employment could undergo a change.
Understood. Thank you so much.
Sincerely appreciate the opportunity. Look forward.
Thank you so much.
Thanks a lot.